Welcome to Markets Now. I'm Michelle Rook along with Scott Varilek with Kooima Varilek, and we've got pretty much everything to the plus side except for the cattle market. But I want to start off in grain, Scott. The pop here, how much of it is technical? How much of it is this hot, dry weather forecast?
Well, thanks for having me, and thanks for starting off throwing my cattle under the bus. But yes,
We'll
grains
get back
having
to that.
grains having a nice day. I think we had a true blue, just oversold grain market: corn, soybeans, wheat. Stochastics were red line to the downside, oversold. So finally able to get a little recovery, and I think there's a lot of reasons you can throw at it. I don't know if there's one in particular that's leading the charge right now. We'd like to look at the heat next week and say that that's the biggest player and why we're rallying this market. And you can make that case in the soybeans, but from my perspective, I think the large area that has gotten some rains over the last couple of weeks, that we're going to be fine. That crop's going to be okay. We've got it made. I'm still thinking thumbs up. Yields are going to be good, and we're going to be okay with that. So that may be part of the reason why we get a few, buys in there. But I'm seeing some of this technical analysis and saying, okay, we've got some gaps above us. We have an oversold market. Great time to go recover. Sometimes you can put a low in August, make a little charge. So you got a 30 cents higher from here. You got a gap in the soybeans, and 30 cents higher, you got a gap in the corn. So feels like to me this would be a great opportunity to make a little run at that. And you've also got some of this inflation talk creeping back in again. We've got the stock market acting a little rough, and you start to hear that buzzword inflation. We know what that did for us last year in these markets, very large rallies. So I think that's just such a big key buzzword in the market to encourage some buying. So we'll see if the funds take after that and try to make a run with it.
Yeah, but we've got to get, December corn closing above the $5 mark. We got November beans above the 200-day moving average. So that was pretty key, wasn't it?
Yeah, that's very key to get the beans. And I think the beans are going to have to be a little bit of a leader here. They did have the less acres. Yeah, still a little August weather premium, maybe just a little bit. Corn, it's going to be tough with the size of acres that we have. I know we've experienced some tip back, and that's going to be, we talk about that every year, but there was some pretty key heat moments right when that mattered to cause some of those issues. But we're going to have a pretty large crop coming in with that kind of acres. So, yep, you can give or take and wrestle over what that actually is. I understand, but it's going to be a lot of corn that we're going to have to chew through. We're going to have some regional basis changes. So I think corn has to, yes, get through the $5 if it wants to find any legs. Sure. I don't think they're going to be strong legs, and it's going to be able to make a extended rally on. But getting through $5, that's probably goal number one to see if that can happen, because it's more uphill battle for the corn than it is in the rest of the markets.
Yeah, and we got about 4.5 million bushels sale of new crop corn in Mexico this morning, but we're going to need a lot more to keep or sustain a rally, to your point. Okay, cattle market. We'll go over there. We did break some pretty key technical support here. So is there much more downside risk, do you think?
When you're talking about a market at record highs, yeah, it's a little scary when you start talking about downside risk and how low it can go, because there's a lot of room down below as high as we are. We've made it to these levels for good reasons. The tight supply, tap on the excellent demand as well. So we've got a great setup for the cattle market here, but cash has been the leader. Live cattle cash prices have stayed strong all through the summer. And at your first sign of a little bit of weakness, where we start to get a little bit nervous in the market. So we had some early trade in the week, 188 to some just regional trade, a few different regionals out there. And then they kind of got their full fill on cattle, started to pull some prices back. And the majors are playing tough right now, saying we've got cattle out in front. We already had our little Labor Day buying spurt in the beginning of August and really pulled back. So we've got cattle that make a lot of money. So we've got, yes, some willing sellers. And as they see the cash roll over, they might want to get some of these cattle sold and cash in this $400, $500 a head winner, because we really need it in the cattle industry. So a little bit of weakness in the cash as far as then you start to analyze your protection a little bit as well. Okay, what do I have for hedges on? This market looks like it's maybe topped out for a minute here. Getting into September is always tough trading, tougher cash market. And packers are saying, we're 30 days out. We've got all the cattle we need. So you're starting to maybe see a little bit of hedge pressure. Some guys saying, you better cover my butt. I better figure something out here because we're at some very high prices. So that just kind of feeds on itself, steamrolls lower, and you get a little bit of a break here.
Yeah, but the discount that we have to the cash already built into the future should catch us here, I would think, at some point. And it's nice to see that we have at least kind of sold off here going into this cattle on feed report this afternoon too, isn't it?
Amen. I think that's a good thing for the cattle market that we've had this break ahead of the cattle on feed report. So some of those markets, and then if you get a little bit of a report that you have to soak up a little bit of negative news, we've already broke several dollars here, so you can fight that off a little bit better. And it feels like, yes, I love your point on the discount and then some of those deferred markets, because we're trading 188 cash in some of the north here, and we've got Fed futures 186, I guess D's at 182. That feels good. We still think that the tight supply is going to rear its head. We're not going to find a bunch more numbers here. We still have to rebuild the cow herd. We still have heifer retention to go through. So we still get to fall on that tight supply yet to come. So I'm not standing here saying this is over, get protected. This thing could really go lower. It's going to be able to fight back. It's going to find its way. We're going to have to turn to that feeder market to see when that's going to start to turn. And maybe it's middle of September, maybe it's middle of October, but I think we're going to be able to get that done.
Yeah. This sloppy cash that you talk about, how long is that going to last, do you think?
This is the time of year where you always say, okay, we're going to get these cattle cleaned up. It'll be 2 weeks, we'll get them cleaned up, we'll get them gone. But then we get 2 weeks happens and we just keep kicking that can down the road. So it's as long as the packer wants to sit on his hands and let the market fall. I do believe we have a tight enough supply. They might say they've got a lot of numbers in front of them, but we don't have them. The feed yards are still current. So we can afford to back up some cattle here for a little while and not be overrun and have a large hole to try to climb out of. So is it a month? Is it the end of September? I guess that would be where I'd try to throw, okay, maybe that's the point when packers are going to start to say, hey, we've got a fall run of cattle here. I might want to take a charge and get some of these cattle bought. But if it wasn't for these regionals propping up the cash market, it'd be a lot tougher sledding. So hats off to them for keeping some of these prices a little bit more on the honest side.
And cash feeders have seen a little weakness creep in here.
We have had, the first little sign of softer cash feeder prices, and started noting that a little bit last week. And it does feel a little heavier. I think everybody that wanted to get some cattle bought to try to make sure they had something in the yard did. And now you'd like to be a little bit on the pickier side. You've got high interest rates. You've got, putting a lot of money into these animals when you're selling a fat steer and then trying to buy a yearling back at the same price. That's a tough business model right there, to try to then have some break evens that are a lot higher than what these discounted futures are. So we have hit the brakes here for a little bit. I expect that once we get into the fall run and there's some more numbers, you're going to get a lot of lookers. There's still some feed yards that are wanting some feeder cattle. So we're going to be able to recover that. We just need to get another month down the road here yet.
Gotcha. And we'll end with hogs. So higher yesterday, some follow through today. Is that just basically buying this discount, you think, or what?
It usually takes a few weeks before October tries to close that discount where August goes off. So it's a little maybe sooner than I expected. And maybe you can tap that up to, maybe it's a little ironic that the cattle finally break and the hogs start to rally here too. So could be some of that spreading that's happening as well. But yes, too far of a discount. I think the hedgers that had October, December kind of positions saw this as an opportunity, as that's probably low enough where I can capture some of those prices, lifting some of those hedges and look further back, rolling hedges back. So yes, I think the fronts have found enough of a discount here to where they were appealing to try to boost these front markets back up and maybe roll some hedges back.
Sorry, I should have asked you when we were talking about cattle with this heat. You know, we are not building much premium in here, but have you heard of any losses from previous heat, or how concerned are we about this heat in the feedlots coming up?
The previous heat was rough. I mean, there was definite death loss and definite, loss of gains when you're staying that hot for that long. So when we get to these large heat, you have to look at how warm it's going to be at night. If those cattle have a chance to cool down at night, we're going to be okay. So there's a few of these nights here that look like they could be on the warmer side. If you don't give that animal a chance to cool down throughout the night, that's when we really can struggle and start to see some death loss. So so far, I think we're going to be able to make it through it. Yeah, we have not put any premium in for it.
Right.
Probably warranted that we probably should. It's been a little bit tough, but yep, watching those night temperatures, I think that's what I'm going to watch.
All right. Thanks for joining us as always. Scott Varilek with Kooima Varilek. That's Markets Now.